Welcome to a deep dive. Today I'm doing it with Millie from
Correct.
from Truemarkets. Thanks for joining me.
Thanks
Uh,
for having me, man. I appreciate the invite.
yeah, so I had just kind of found out about you on Twitter. Been following you for a while, but it's super cool. Maybe like why are you building a prediction market other than the fact that it's like really hot right now?
Yeah.
Uh, yeah, what sort of got you going down this rabbit hole to think this you had a better way?
Yeah. So, actually, this isn't my first crack at prediction markets. I worked on them. I've worked on one back in 2022 with a project based in optimism called Dailies. They have a really smart team. They're working on similar stuff even today. They kind of didn't continue the venture down the prediction market path because prediction markets are generally very tricky. Despite what people might think, like they're hot right now, they're actually very tricky from a mechanism design standpoint. Like the idea seems very easy, right? Like it's an app where you just go and you speculate, and everyone's used to like buying and selling tokens. It's not that difficult. But when it comes down to like the actual implementation, it's actually not easy. Which is why Polymark took them so long to actually get really big, and they've actually done a tremendous job, like in the past year specifically. Like when I worked on this project back in 2022, it was in the depths of the bear market, and there just wasn't a lot of demand for prediction markets, and it was the bear market, and we were on Optimism. Optimism had just launched; they didn't have a whole lot of good publicity at the time. Their token launch was a little bit rough, but it was just we didn't. It was hard to get a lot of like activity going, and there were a couple constraints with that model that they had built out. But I've learned a lot from that, and one of the interesting things I learned was I realized like how difficult this prediction markets are. They're more difficult than um, a spot dex for sure. They're like I want to say they're much different than any kind of other derivative product, but they have these unique characteristics that make them really good because you can essentially offer markets for the really long tail things like assets or events. There's a lot of like flexibility in what you could do once you nail down some sort of implementation. And what we realized back then was that like it would take a tremendous amount of work to do it. And the team didn't have the resources at the time, and they did have the resources. They just had it dedicated elsewhere, and so like it just at that point it didn't make sense to continue the project. Sort of got wound down after about 5 6 months. Um, but the interesting thing was that like I saw how Polymarket what they were doing and like they're pushing forward and they're making inroads, and now I was like really impressed by their ability to like continue on. Part of it obviously was like they had access to funding and stuff, but aside from that, just like there wasn't a lot of liquidity for prediction markets at the time. Like even on Polymarket, it just when you go there, like it was nothing like it is today. Like you would the elections already passed, but if you even go look at like any other market on Polymarket, like not related to like election or Trump or their inauguration or anything, they are significant orders of magnitude more liquid than they were in 2022. So at least 10x on most of these markets. Any of the sport markets, any of like the long tail sort of pop culture markets, they were not nearly as liquid as they are now. So this was like so they actually put in a ton of effort, like on the marketing side, on like bringing attention to prediction markets, making them relevant, and like it really paid off for them during this election. But what they did as a service to like the industry is that they put prediction markets on the map. They made the demand to like trade these things, interest in them spiked. And so like even right now, there's just a ton of interest in like all the other markets on Polymarket. And so like what the opportunity that wasn't there when we were building they're working on this idea in like 2022, and it's not the same idea, but it's just a similar idea in 2022. It just like it's feasible now. It's very much possible now. There's a lot of demand for it now, and like you can get a product working with the right implementation and get a decent audience and get attention now. At the very least, you could be like a secondary source of liquidity to Poly market, and then in a much better way, you offer like the unique markets and different sort of features that like differentiate you. And I think realistically, like when I look at the prediction market space, there's Polymarket, and then there's a couple Web2 like legacy prediction markets, and then there's really nothing else. It's really like wide open. Like there's a few like prediction markets on chain. Honestly, most of them just seem like like I think the second biggest one was Predict or something during the election, and they're essentially like a one-to-one clone of Polymarket. There's nothing wrong with it. Like they have a few differences. They have like the native yield feature and stuff, and you get points on blast. But there's like there's just like in my opinion this huge opportunity to be number two, and like there's going to be a number two, and a lot of people don't understand why there will be a number two, and it's a very simple reason why there will be because for prediction markets you basically it's impossible to cover everything. It's just not possible. Like Polymarket, as big as they are, as many markets as they have, you just cannot cover everything. Like if you think about a perp dex or a spot dex, you just let people list the tokens, they'll list it. On a perp dex, you essentially there's certain assets that people like to trade, like the long tails, and then a bunch of the short tail alts that are hot at any given time. But if you look a lot at the different perp exchanges, they're pretty much like all limited to the same kind of markets for the most part. Because there's like it's like limited in what you can speculate on. With prediction markets, you can speculate on anything. There is no limit, like no bound. Once you have an implementation and it works, you can literally, well, it depends if the implementation is right. And there's a lot of prediction markets out there that they're sort of stuck with whatever their Oracle offers them. And this is why we sort of went with the enshrined Oracle approach to allow us more flexibility. But the long story short here is that we can essentially offer markets for just anything. And so like Polymarket, in a similar way, they're offering markets very diversely. They, even though they've done a ton of work on that front, they just can't cover everything. You just can't. It's too difficult. There's like many sectors they're not like attempting to capture right now. Like any kind of like prediction markets, they're really interesting for long tail assets in a way because like things like meme coins and stuff, like really short small caps, you can't offer like leverage on these or perps markets on these. It's really difficult to get on the short side of some of these trades. Whereas a prediction market allows you to do that. You can actually service even the longest of long tail just because prediction markets are made to be able to do that. And because of the binary resolution mechanism. So you can actually like offer markets for basically anything. And not all prediction markets offer it. If they're with the right implementation, you can offer it. And so for us, like we just see a lot of sectors that Polymarket is just not attempting to go after, which we think is like would be in demand. And then I think in like the long term, there's just this huge opportunity in the prediction market space because it's going to grow by an order of magnitude again by the next election. Because this last election, it was the biggest event for prediction markets in history, and if Polymarket had like around a few hundred, I think that had like 3 to 400 million TVL just related to the election. I think next election that would be significantly more, probably in the billions. And I think this was the first time really we had an election coincide with a proper prediction market in the era of like scalable blockchains, because Polymarket was there in 2020, but they had just launched. There was like they were on ETH, like there was Polygon at the time existed as Matic, and like they had this really slow bridge, and the UX wasn't good. Like there was no scaling on ETH. Trading these things was very difficult. So there's no coincidence that like after all this after like all this effort that's been put in like into the space, into prediction markets over the years. Like prediction markets have been around for centuries. But there's no coincidence that they really took off during this era when like prediction markets meets crypto, meets scalable blockchains, meets open access. And so like this is when it took off, and this market is only going to grow. And so like we want to be there from day one. Like we want to let the community get in from day one, but we also want to like make sure that we're early to this opportunity for like the future, because it's going to actually be huge. It's going to be way bigger than like anyone can expect right now, just because prediction markets really never had their chance. Like they were never given the opportunity. Anytime prediction markets have been spun up historically, they've essentially been targeted and taken down by like
well, they're illegal to launch in the US not launch in the US, but for US customers to use.
I think now there's like there was a favorable regulation for Kalshi where like
you got to get approved, right?
Yeah. But in many countries, it's still like they don't allow. Like there's many reasons why like Web2 like businesses just get targeted when they do this, and like a lot of it goes into like it's this. There's like it's not clear how they resolve these markets. There's a lot of there's reasons why they were regulated in the past, but there's also been a lot of like just maliciousness towards it. Like we just seen in France recently put out a headline that like they're looking into banning Polymarket after this recent election, and so like they're just it's history does repeat. But like at this point, you can't put the genie back in the bottle, because once it's been on chain, you just can't stop it. That's what crypto's about. So
yeah, well, I mean, to be fair, I think France bans like short selling as well. It's like you just
Yeah.
keep it going. Anyway, that was an awesome introduction. Why don't we just kind of get into how it works, and then we can go from there. So I guess I'll try and draw it up over here. So we got we have our smart contract here, and somebody wants to create a market. Should we use the classic Trump Kamala one as an example, or something different that you guys are targeting?
I guess that one's already finished, so maybe we should try something different.
Will Bitcoin be over 100K by New Year's?
Sure. Yeah.
Okay, so BTC greater than 100K by Jan 1. And then what happens next? So, like, if somebody comes in, I'm guessing, so this will be like the market creator. Does he pay a fee to start a market, or how does that work?
Yeah, sure. So these are good questions. So basically, excuse me, on day one, it'll be essentially like a whitelisted actors to create markets.
Okay.
But eventually, we will be transitioning out of this model. Right now, Polymarket is under the same model. The reason for this, and it's interestingly enough, like when we worked on that project back in 2022, we actually had that design to be permissionless, and like you could create markets permissionlessly in that with that layout. Like that was actually part of the reason it was very hard to get like the app going, because permissionless markets is very hard. It's not like so you just drew like a box containing the market, and that sort of like represents what we're wagering on. But behind that's just the tip of the iceberg. How that market is resolved is actually really important. The nuances of the rules, of the description, and like under what circumstances it can be resolved is extremely important. Because let's say, just phrased that way, like how do we judge like if Bitcoin really breached 100K? Let's say on Kraken where there's low liquidity, it wicks up to 100K, right? And like then how do you? Let's say it wasn't actually a real print; it just happened like on that one exchange. Do we resolve the market? So it turns out you need to be very, very precise with any market. It doesn't matter how trivial it might seem. You have to be very precise with the language of the description of the rules, of how.
Do you push that all on chain, like when you're making the market, or do you like link to somewhere like off chain?
So for us, we actually do push it on chain. So we actually create a string that literally lives in the transaction where the market is created.
String of everything.
Yeah. So there's a string specifically for the like the market question. There's a string for the sources of the market, and there's a string containing the description and the rules. And Polymarket doesn't actually do this. Their rules are off chain, and they just sort of like they actually like even they edit the rules sometimes. They do clarifications. They post after the market's created. So like they have a different approach to it. But for us, we wanted to approach it a little differently. We wanted to give a little bit better assurances to users, and so we wanted to like push everything on chain to make sure it's really accessible. It's actually really easy to read up on Etherscan. It's literally like you just open Etherscan and it's like right there. The Etherscan space it really well. So the point being that like it's very difficult to actually create markets, and so the market creation process at first will be like whitelisted actors like creating markets, but we actually have a way of like opening that up because this experience I had with attempting permissionless markets before. It really taught me a lot on how we could actually offer it legitimately. And there's a lot of things that sort of worked out to our benefit to enable it over this time, like the rise of like LLMs and stuff, which can really be used to sort of, in this sort of situation for like drafting really, really precise markets, using just plain text prompts. And so like, it's really just a matter of training a few models on like our docs, our guidelines, our white paper, sort of making sure that it sort of understands what the rules and descriptions should abide by, and then it can essentially just create markets for users at will. And so like that feature won't be live on day one, but it's something that we're going to be working towards. But at first, it'll be whitelisted actors. So like that market you just drew up, it would be someone on the Oracle Council would be creating the markets. They would draft it. Once a market is created, all the strings they go on chain, and then essentially what anyone can do at that point is show up with some USDC and mint one yes and one no token for every one USDC that they deposit. And this model is actually similar to Polymarket. This was that like Gnosis essentially came up with this design way back like in the early days of Ethereum. And so like this model is actually very, very sound. It's proven. It works really well. And this is
USDC will get you one yes token and one no token.
Yeah, and one at resolution, one of those tokens will expire worthless. The other one will be redeemable for the USDC.
And then does it make, I guess, an AMM for yes USDC, no USDC, or just yes, no?
And so when we create liquidity, we create liquidity for a yes pair and a no pair. So there's a yes USDC pair and there's a no USDC pair, and each one trades at its own value. And so this actually allows for people to hedge in real time with their positions and market makers. Allows them to have like relatively low exposure to the outcome. But it is still very tricky to provide liquidity in markets.
Yeah. So, well, and then there's also ARB opportunities between the two.
Yes, absolutely. So there's, and then there is, we could actually just make a pool of yes and no tokens. The problem with that, it becomes much more difficult to like
take USDC.
Yeah, exactly.
Yeah. Okay, so super cool. So this looks pretty simple. You have I mean, you guys are just doing binary, right?
Correct, binary. And like, interestingly, like the app that I worked on in 2022, we attempted to do it like pari-mutuel markets where it's not binary outcomes, and that became so difficult to create liquidity for different markets that it made it infeasible essentially. And so this is why we're pursuing this strategy. And it's interesting because I see a lot of prediction markets, startups trying right now, and I see them going through these steps, and I can see what the end game is going to be for them. They're going to eventually like abandon these models, but like I could just see them going through the pains now. And like I would like, my recommendation to anyone who would watch this and work on a prediction market, I would say stay away from like trying to change the financialization of these in like a drastic way. There's really no room to add leverage to these markets. There's no room to like have like a shared debt pool, like a GMX style. There's no like room to create a custom AMM to like there is some ways you create a custom AMM, but like just like an AMM that allows passive liquidity. Like these things are just like they're dead ends. Like anyone that goes down that hole, they'll see it just doesn't work. And the reason is because the reason for this is it might not seem intuitive at first, but when one asset can go to zero, like at any point, you just can't provide passive liquidity to that. Because if you're in a passive liquidity AMM where you just deposit liquidity, when one of those, whatever asset that pool you're in, if it expires worthless, your whole LP position will be worthless, and everyone who's in that pool is forced into the same range because like these like how these passive liquidity solutions work. You're forced into the same range, and everybody's forced to take the same opinion, and it just doesn't work. There's like a reason why Polymarket abandoned the AMM model. Do you know why like none of those AMM models have taken off? And like the simple, like the order book just really works for this because it allows like anybody to
order books, or do you do AMMs?
So we actually use a combination of like order book and AMM, which is Uniswap v3. Right. So it's Uniswap v3 is the reason we use it. It's very specific, and that's because it's more like an order book than it is an AMM. And so that's the very, very, very specific reason why we use Uniswap v3. Because if it was more like an AMM, we would not touch it. We would go with the order book model. Because the fact that it allows anyone to provide liquidity in any range in any way is why we use it. If it forced people into one passive range, it would not work. Like I promise you, there will not be a model that works this way, that has a better user experience than Polymarket. It just won't happen. And that's because like the LPs are just like, they're set up to lose in that model. You have to, and like basically you have to wind down the market before the resolution day comes. You have to take all these sort of like procedures that just degrade the trader UX really. The reality is that like for somebody to get a winning yes position, you need to have somebody who takes a losing no position. And there's no way to solve for this. And like passive liquidity can't solve for it. It just doesn't work. And like any kind of debt pool model is even way worse. It's more dangerous because now you can lead to insolvencies for like a GMX, not like GLP pool. If you try to create prediction markets and use it in that pool, first of all, you have to have an oracle which sort of like prices these markets in real time. And second of all, like you really open up yourself to like potential insolvency for the protocol. So like for us, we came to this conclusion that like we really early, and this was way back in 2022. I realized that like there's really no improvement to be made on like the actual like financial side of this, like the financial infrastructure, the sort of trading infrastructure. There's really nothing to change there. Where you really want to focus on, where all the meat of a prediction market comes down to, is the oracle. It literally comes down to like how do you resolve markets. This is like the fundamental base thing that like really needs improvements. And this is the one area where we feel like we have an improvement over the status quo. But aside from that, like there, in terms of like the AMM, the trading print, there's really nothing to improve. And so like we realized this pretty early, and this was part of the reason we couldn't pursue it, because we realized like to solve this problem requires quite a bit, like a whole redesign of the project. So like that project didn't work, and so that's why we're tackling it fresh now. And I keep saying we, but the team is not the same. There's like completely different. I shouldn't use that to say that anymore. But yeah, essentially like yeah, we're approaching it from first principles to ensure that like we have like this sound model where we can, any market we offer, we can actually resolve it. And like the thing with UMA is that like you're really at their whims if you're using what markets they offer. It's whatever they can resolve, and really their solution is honestly not like it's not an ideal solution. Like anyone serious about these things just knows that like a token holder vote just is not a reasonable way to resolve like ambiguous, markets, resolve disputes that are like contentious. It's just unreasonable. And really all it does, it might be easy to like for Polymarket because they can like sort of like wash their hands with any yeah, like their hands off, right? They just offload it to a third-party service provider. It's easy for them, but like the users just get very frustrated because the process is just so like untransparent, so crude. It just yeah, it's not an ideal situation.
Yeah, well, I'll make a prediction. I'll bet you somebody will offer leverage on these things. I think you're underestimating what a centralized wrapper over top can do for some people.
You know what? Like they could try to offer it, but like like in markets that you can offer leverage, oftentimes they're the least interesting because
completely.
Because like imagine like if you created them, like the markets that you could create leverage for are ones that are very predictable. They resolve at a very predictable date. That's something like the U.S. election. But then when the election day comes, like these things resolve really quickly, and before you know it, all of a sudden like one market is trading at 90 cents, right? And like one market goes basically completely to zero. And so like the time when you need liquidity to liquidate positions is when you don't have it. And like that's when all the volatility is at that time. Versus like with Trump, yeah, there was a few swings to like 60 cents, but for the most part, it traded between 50 and 60 cents. Like this was like the price of both sides, right? It like Kamala or Trump, they both traded, their shares were both trading between 40 cents and 60 cents throughout most of the time that they were running. And so like as a trader, to get leverage on this and then potentially have your position wound down before the actual resolution date comes because it's going to be too volatile that day. It's just not that attractive to trade this. Like BTC has more volatility in this time. Like why would you want to trade like a few percentage points move on a Trump like win or something? Like it moves really slowly, right? Like there wasn't like it didn't really shoot up at any point. Like it was very slow. Like throughout the week, like the odds would move. But like whereas BTC was like had way more volatility in that time, or ETH or like Solana had more volatility. So as someone who's like seeking leverage, it's just not that of attractive a thing because the day where all the volatility is, you essentially have to wind down all the leverage in advance. Otherwise, like if you try to have leverage on that day, you might run into problems where you just cannot liquidate certain positions because there's not liquidity for it. And so like it's just it may be people like do offer leverage for some of these, but it's never going to be like a very scalable product. Because at the end of the day, it's just very difficult to provide collateral and like margin for something that an asset that can go to zero overnight. And so if, there's the only ones that like markets that make sense for leverage are the ones with like really predictable resolutions. Those ones are more boring. The ones that are like less predictable, you just simply can't offer leverage because it can go to zero at any moment. And so like for example, like imagine a market on like, will Israel and Iran go to war in sort of like 2024, all right? Very generic, like obviously a market would be more precise than that, but imagine that market. If something happens overnight, like tonight, like between the two countries, a conflict erupts, that market will resolve immediately. And so like anyone who's like providing margin to that could potentially like provide margin to the wrong outcome is basically going to lose everything. Because like that, just going to get depleted. Like overnight, it's not like you can't predict it. You don't know that like, oh, this is the date Israel and Iran will go to work. It just happened at any time. And so like for those markets, you just can't offer leverage. And the ones that you can't offer leverage is just very, it's just not that attractive, like in general. So yeah, maybe someone solves it, but like it probably won't have like a huge UX improvement over the status quo.
Cool. No, I love the explanation. It's great. Anyway, okay, so January 1st comes around. Let's say, of course, we're gonna be, of course, we're going to the moon. So we'll be at what are we going to be at like 420K by then? So it's going to resolve yes. What's the process of it resolving?
Yeah. So if like the market is resolvable, resolutions in our system is very similar to polymarket. It's essentially permissionless. Anyone can propose a resolution when the time comes. They simply put up a bond, like a $250 bond. They propose a resolution, and a challenge window begins. If that challenge window passes with no dispute, then we assume that the resolution must have been accurate, and the market resolves. The resolver gets their bond back, and they get a small reward. And anybody who had yes tokens can begin redeeming. So that like process is what makes this Oracle optimistic. And so like these optimistic systems, you assume that the proposed resolutions are accurate, they're correct, unless disputed.
How long is the challenge window?
So the challenge window is configurable. I think on day one, we're going to have it around six hours. I think our market has it at 3 hours. So for us, we were kind of like, this was something we thought about a lot because we don't have as big of a user base as Polymarket. We sort of, we can't be as aggressive with the challenge window because like they have a lot more people watching, observing, using their markets, ready to challenge something. So for us, we went with a little bit longer delay. But also, one thing I haven't mentioned yet is that like when we launch now, our model is going to change slightly where we're going to have AI agents essentially resolving most of these markets so that they're resolved promptly in time. And like we'll also have AI agents essentially monitoring for disputes and able to dispute. So this is actually something that's just like accelerated really fast recently. That it's like a tailwind that we could use to our advantage and sort of like ride that wave of like advancements in that field to just like apply it here. And so like for us, we were going to automate a lot of a lot of these tasks that we're going to talk about in a minute. Like we actually going to be automating a lot of this with AI agents. But yeah, so someone puts up the bond, they propose a resolution, the challenge window begins. During that challenge window, anyone can permissionlessly dispute it by putting up an equal bond. And if they don't, the Oracle optimistically resolves the market. Now, all of the nuance and all of the tricky parts come from if there actually is a dispute. That's where like the Oracle actually kicks in.
I mean, yeah. First, is the AI agent that's like off chain, right? That's not like, or do you use an Oracle to bring on like the AI results?
No. So the AI agent is just like it interacts with the contracts just like a human would.
Okay, yeah. So it's just like a script you're running off chain.
Essentially, exactly. So just like watching in real time and just like ready to resolve markets automatically. And like any human can do this task too. But the idea of having the AI agent just allows you to like offer lots of markets at scale and sort of like really scale it up and resolve all of them promptly and like orderly, so that there's like there's not big delays and there's not opportunity for people to like try and propose malicious resolutions and stuff like that.
Okay, so let's say a dispute now is submitted and you have say $250 here and $250 here. What happens next?
So this is where the Oracle kicks in. The Oracle has like 3 stages of dispute resolution. So 3 basically stages of escalation. And this is the first stage. So if someone disputes this permissionlessly proposed resolution, it gets kicked up to something we call the Oracle Council. The Oracle Council is a committee of people who are just like familiar with the market, familiar with the project, familiar with prediction markets, and they're they can provide insights into like resolving these markets. The Oracle Council is also, if you would notice, the same body that's going to be resolving creating markets initially at Truemarkets. They'll be whitelisted to create markets for the community. They're also going to be the first ones to resolve disputes. They'll be the first arbiters in the protocol. The Oracle Council makes a decision. They see a dispute. They look at the data. They look at the sources. They make a decision and they propose an outcome. That again kicks off another challenge window. So the Oracle Council is somewhat centralized. And sorry, before I go forward, I mentioned before that we're going to have AI agents automating a lot of these tasks. The Oracle Council will also probably shortly after launch be mostly AI agents as well. Like this is how fast these models are actually improving that we could apply them in different ways. So our Oracle Council will also probably be a mix of AI agents in the future as well. But so the first dispute is resolved by the Oracle Council. It kicks off another challenge window during which anybody can now dispute what the Oracle Council.
How long is this challenge window?
This challenge window is similar to the other one. I think we had it configured at 6 hours, but we might be dropping that lower depending on how things go. So you could think of it as generally either as long as the first challenge window or shorter. And so after that resolution, anyone can dispute their proposed outcome. The bond to dispute this resolution is slightly higher. So this bond is in the thousands. You would think so. I think it's currently configured at 5K. So to dispute an Oracle Council's decision, you put up a 5K bond and you kick it up to token holders now to weigh in. And token holders, which are the true holders, they essentially now put in a vote, some sort of decision as to like what they think the outcome is. And it's just a majority rules situation where whichever side gets more votes, that's the outcome that's resolved to. And then again, after that, there is another period where a challenge window where you can submit a dispute. And to dispute that resolution, it requires a very significant bond, around 25K, to send that now to the final layer of arbitration, which is like this human coordination layer that's made up of like provably reputable people in the industry that sort of act as jurors to resolve disputes and submit a final verdict. And so the idea here is that like there's these various layers of the stack that just keep the layers below it honest. So like as an Oracle Council member, do you have really no reason to act dishonestly and try to vote maliciously on the outcome? Because it's very trivial to dispute your resolution, right? It's a $5,000 bond. Anyone can put up 5,000 and dispute it. And if the Oracle Council is deemed to be like acting maliciously, they would just get ejected and from the protocol. They wouldn't really be able to manipulate outcomes because there's a more neutral arbitrator higher up in the stack that can resolve it. And so like it's really just like not in their incentive to act maliciously. And the same goes for token holders. And so this is actually what I don't like about UMA is because they don't have a solution after token holders. And so like there's no real way to stop UMA from like people from like buying up UMA and like resolving a market maliciously, aside from the fact that Polymarket has their like safety multi-sig, security multi-sig that can step in. That's really the. And so like if you're gonna have a multi-sig that can step in, you may as well formalize that and make it something way more transparent so that token holders actually are highly incentivized to always act honestly, and that there's really no incentive to ever try to manipulate market because it's very clear that they could get disputed permissionlessly, openly. And so for us, we have this final human coordination layer of, at first it'll be 75, a list of 75 attesters that can step in and act as jurors anytime there's a dispute. And these people, there's a whole mechanism which keeps them involved in the dispute resolution process. And so like that part is really interesting in itself. But the idea is that there's 75 of them. At any time when there's a dispute, a group of them can be selected at random to vote on these outcomes and act as jurors for a final verdict. And once they submit the final verdict, that verdict is now final. There's no more challenging that, and it gets committed on chain, and the market finally resolves. And in that process, if like there's any like disputes that are clearly like trying to grease like the protocol and prevent like the market from resolving, they will get slashed. If it's a legitimate dispute that like there's really something to be had here, like there's any like dispute that has even like somewhat merit to it, that like there is an argument to be made, they will not get slashed. And so this is a decision that's sort of like made by whoever the party is that's voting on the proposal. And it's really simple to think about. And if it's obvious that there's no chance that a dispute is legitimate, then it just gets slashed. Otherwise, you essentially you give the benefit of the doubt, and you kind of want these processes to be played out because it keeps the protocol honest. So you wouldn't slash them. And so that's basically the nature of how this model works. And really, like the idea here is that you wouldn't need to escalate it to jurors very often. The Oracle Council should be able to resolve most disputes, and they should be able to do so like pretty transparently and honestly because they have no like real means to manipulate a market. And so like the idea here is that like we try to add as much transparency to the process as possible, so that a user who's like trading these markets can make like a legitimate. They can look at it and they feel like they have some reassurances that when they make a trade, it'll have a legitimate resolution, or if they don't agree with the resolution, at the very least, it's a very transparent process as to how we arrived at this resolution. And so we're hoping that that sort of like solve this issue. And of course, like some of these bonds are very high. And so like for markets that might have a smaller cap, we might be able to explore like changing the bonds for those ones. And so there's a lot of like, we're doing a lot of research to how we can make it so that this Oracle model scales for every level of like any kind of market. Because a very small market, there might not be an incentive to dispute Oracle Council decision, even though if you don't agree with it, because the market might be small. And so like we want to make sure we can also accommodate those. So like these values I gave you, this is more for like the larger markets, like a more generic market. But there's way we could tweak these to make it, also scalable and applicable to more smaller markets, micro markets, and anything on this.
Well, I mean, I was actually going to say it's relatively cheap in my mind. Because like token holder votes and even getting 75 people to vote who are presumably rich.
Well, it won't be 75 people to vote. So it'll be a random sample and a random selection of jurors sort of would be acting to vote. And there is an incentive for them to vote, which is hence why there's a bond, because you do have to pay incentive to these people. And so like there is incentives for them to participate.
And then are there votes for these guys? I'm guessing like quarterly or yearly.
No, it's actually like whenever a dispute arises. So if there's disputes that come up, there's jurors are selected at random. If they respond,
how do you pick the jurors? Who the list of 75 people you select from?
So their addresses are registered into the into our escalation contract, and they actually given an NFT. So they're given these tester NFTs. The NFT is actually like the art where we put a lot of work in it. Like the art kind of looks pretty cool too. But they get these tester NFTs, and that's sort of like it's a soul-bound token, and that's sort of what we track them by. And everyone who holds these tokens will be selected from at random from this pool of jurors. And so like there's a chance if you're a holder of this NFT that you'll be selected. And there's a process where we incentivize these people to opt in to jury duty. So just by getting added to the list and getting NFT is not enough to actually be selected as a juror. We select people from the community, from the industry that we think will be suitable. We gave them the NFTs, but there's actually no obligation for them to participate. There's an incentive for them to participate. And this incentive runs bi-weekly. It's a lottery system where if they decide to opt in to jury duty, they will be eligible for this lottery. And anytime they don't opt in, they're just not going to be eligible for the lottery. They're not going to be ejected or anything. They're just, they just sit there dormant. And so anytime any juror wants to, if by their own volition, they want to participate in the market, they could do so by participating in dispute resolution. They can do so by essentially participating in the bi-weekly lottery. And once a vote actually comes, there's also an incentive to vote if they're selected. But by opting into to this lottery, they're opting into jury duty and ready to be selected if needed. So they're just signaling to the protocol that they're active, they're willing to participate every couple of weeks. And if there is a dispute, they're selected at random. If they respond in time, they get the reward and they vote and they get a reward. If they don't respond in time, another juror is selected to come in and to vote on the dispute. And this process goes until like all 11 jurors that are meant to vote, and the outcome is resolved. And this lottery system will be live on day one, so they'll be able. So everyone who's a tester will be able to partake in this lottery, and we'll also be accepting more community members to like people who have some reputation tied to them. We're part of the industry, such that like they're not incentivized to just vote dishonestly for the fuck of it. They're willing to, excuse my language, they're willing to they have a reputation at stake. They're not going to just like propose some malicious outcome. And so like basically that's what the idea behind it. And we're going to, on day one, it's going to be 75 testers, but we are going to be expanding that to, larger. And I feel like the bigger that number is.
So control, how do you decide when to mint a tester NFTs?
So that's a governance decision. So like governance, like true holders would be the ones admitting jurors and removing them if they're inactive. And so like that process is very straightforward. It's just like, the token holders can add and remove jurors. And obviously it doesn't change the security model, because if like someone observes token holders starting to pack the tester list with like a bunch of random malicious addresses, people just won't participate in markets. They'll know that like something fishy is going on. And so they'll like just wind the positions, or like new markets that get spun up, no one will participate in. And then there's also this this ability that we can actually hard code like the resolution path for certain markets, so that even if newer testers are joined, they're not able to actually resolve markets that existed before they joined. So there's ways that like we can secure it, but like it doesn't erode the security of the protocol either. That like true holders, that governance essentially appoints these as testers. Yeah, so like it's a governance basically adjustable panel, and the idea is that governance will keep expanding this to more like provably reputable individuals.
Super cool. Yeah, so I had on here a little while back somebody from Augur on, and I know their final solution, Augur's the old prediction market.
Yeah.
Most, I'm sure you know, but for those watching who may not know, you can go back and look at that one. So they would say that you need to fork at the end.
Yeah.
Is there any discussion around that, or
I think that is a flawed model because I think Oracle that doesn't offer finality, it's just not a desirable thing. An Oracle that cannot finalize a resolution, reach some final resolution, it just no application is going to want it. And that's really why Augur, even though like they're enshrined, like the Oracle is enshrined in the application, it didn't work because even like their users don't like that idea. They need this finality, and like the idea that like a huge market may eventually be controlled by like this small fork that's been this like token that's been forked several times. It doesn't work. Like anybody who's like, imagine like the amount of open interest that was on Poly market for presidential election. Imagine if like there's a dispute, like the token keeps forking, and like there's like and you're left with a token with like like a reduced market cap is just like is what's left of securing this Oracle. Just like after maybe that market resolves or whatever, but like whoever like who's going to participate again, right? Like who's going to come back in and sort of like want to be a part of like a small, really small a group of token holders that like it just diminishes, right? Your size, we token holders will just diminish every fork. It just introduces what these models. The problem with it is it introduces like this. It sort of makes the app vulnerable to adverse selection, as like it tells people to like come and try and fork, like try and create contentious outcomes. It's sort of inviting them to do this. And UMA sort of has the same problem too, where like the only purpose of like their token is to sort of like resolve disputes. And the issue with that is that like you run into like the people who are going to hold this token, the only people who are going to hold this token are the people who are interested in resolving disputes. And that's just such a small minority of people that are just like strictly hobbyists, like looking to like just look at out like disputes between various parties and just resolve them. Like this is like a very tedious task, and it's also like it's just not something everybody's going to be interested in doing. So you're naturally just like creating a small holder base, like addressable market for a token, and then you open yourself up to this adverse selection where like outside of hobbyists, the only people who are interested are like these sharks that sort of want to use the token holder vote to like skew results in their favor, either like very obviously or in a more dangerous way, in the like more subtly over a long term, try to get an edge over markets in whatever way possible. And so like it just, you're opening yourself to this adverse selection. So like UMA has this problem, but like Augur really had this problem with the whole forking, because like a minority fork, like imagine someone controls a lot of tokens and they create a fork. A minority fork will now, if it's in the right, like if it's on this token holder base, you now have to have this very small token holder group, a minority part of the token supply, essentially like governing the protocol going forward. It just doesn't like, it's not attractive for any application to not have this sort of finality feature. And like with UMA, a token who does have the finality feature, there's sort of like, instead again, it incentivizes sort of like adverse selection. It attracts adverse selection, and also sort of doesn't give proper guarantees, because you just have like this very arbitrary one-step resolution process, just very crude. So that's kind of like both the UMA models and the Augur models have looked into it, and like it just UMA at least provides finality, and that's why it sort of has utility today. Augur, because it doesn't provide finality, it really doesn't have proper application. I don't think like that model will ever really take off like as a solution.
Sure, I don't think Augur ever got to a fork, which is unfortunate. More or less just a lack of kind of product market fit, and on the so for a bunch of other reasons, but but the hobbyist in me wants to see forks. I want to see all of these mechanisms tested, because I think that to be honest, like with these mechanisms or anything, like we can probably be honest, it's probably going to be very, very rare that the jurors ever do anything, right?
And that's a hope, honestly. We would hope that jurors don't have to act much, like kind of like insurance, where like it's there and you just don't need it. But like if you ever do it, it acts there for you. I agree. Like I think the hobbyist model is interesting, and we actually looked into it for with Eigenlayer, and we were trying to see if like maybe we can plug into Eigenlayer as our final arbitrator, such that like their intersubjective work token essentially decides the final fate with their fork system and all that. And well, first of all, we looked at it. It's like there's no legitimate solution even close to ready that we could use. Like it's not even a sci-fi still today. And aside from that, it's they're really not interested. Like Eigenlayer is not interested in anything subjective really. They're far more interested in like very objective faults that can be proved on chain, or at least like relatively easily proved. And even if you can't provide like a cryptographic proof for something, you provide like the social proof. But for anything that's overly subjective, like like a market that's based on like literal language, like plain language, they're not really interested in getting involved with that. So like, and again, like as I was exploring that, I was like, there's really no like benefits of this. Like, there's no reason why this is like a great solution aside from the fact that you get to like offload the service to a third party provider. Like users really just want to know that like there's a there'll be a final resolution. Like this is a really desirable thing from everyone I've talked to that trade prediction markets. The fact that there's like a guaranteed finality is very important for them, which is why sort of Polymarket is like settled with UMA, because they provide finality and they're like this third party service. You just offload all the work to them and you just worry about the application side. And so like that model has worked for them today. But there's complications with that. And like we saw with the ETTF vote, we saw with like the Venezuela election vote, we see it with a lot of markets. There's actually this Twitter account that sort of he's a big Polymarket user, and he's always talking about like how some of these resolutions they don't turn out right, and there's problems with UMA. But like at this point, the community's basically got used to it, to like this sort of like ambiguous result that's been like sort of normalized for UMA.
Cool. All right. Anything I missed in the structure overall?
No, that's actually a really great illustration. It's actually the first time I've explained someone that they sort of like illustrated in real time and just done a really good job of it. So I think you did really good.
But yeah, the other thing then I want to touch on, I know you're doing a lot of interesting stuff around the governance token distribution as well. Don't know if you kind of want to talk on that for a minute and how you're kicking that off.
Yeah, definitely. So we're approaching it. So we're approaching it from a few angles. One of the things is that like a prediction market and Oracle, fundamentally, they need a user base to work, because a prediction market that doesn't have a wide audience, it actually won't reflect accurate odds. Like any of the odds that are like emitting from a market, and like when you look at Polymarket, the reason the odds reflect reality is because there's a lot of people participating that are keeping these odds honest and like making the sentiment reflect the wider population versus a very, very small sample. And so like if you don't have a big audience, the prediction market doesn't really do a good job. But on top of that, the Oracle actually doesn't function well either. If you don't have a lot of people observing resolutions real time, a permissionless Oracle like this, you're gonna have an issue where like an outcome can either get a faulty resolution or a market might not resolve. Like it'll just like run for a long time before, like several hours after it's supposed to resolve, it'll just stay open because it wasn't resolved orderly. It just creates a lot of inefficiencies in the system if there's not a lot of observers. And for our Oracle, the reason why we use this, because it gives us this flexibility and ability to create markets, but it has this sort of effect that if you don't have an observership, like a large group audience that's observing your markets, it won't be able to function properly. So that was one of the reasons that we sort of felt like we need a token from day one, because a token is right away immediately, it's like this, it creates a community of some people that are interested like just in the token, and that for them is enough of a reason to sort of like watch the app, monitor the markets, like even if they're not interested in trading. And so like they just creates this sort of like very baseline community effect where like you could bootstrap a community and sort of make it work. And like this isn't just like cliche stuff, like it's legitimately like really needed. Like the Oracle does not function well without it. A prediction market doesn't reflect accurate odds without a community. And so like this is things that are like fundamental. And so we're like, there's no point beating around the bush. Like people are going to want a token. Like this is a thing that's sort of needed, especially in the dispute resolution process, especially in the Oracle for governing the application. Like there's no point of like, making this like playing games around this. And so like teasing the community about like airdrops and this and that. So like we thought we're going to take like a no nonsense approach. We're going to launch a token and we're actually going to keep it like make it open to anyone to participate. And if somebody said that I actually draw a lot of inspiration from, and I like work closely with over the years, this is Kane Warwick. He's the founder of Synthetics and now Infinex. And I when I saw him do the Infinex like Patreon NFT launch, I thought that was really interesting. Sort of like allowing anybody to get in at a essentially a one price. VCs, retail, the public, whoever wants to participate is interested could get in at like the same essentially valuation, and they participate in the NFT sale and sort of like gives them access to the launch. And so like, and I know like maybe the wording on Patreon on Infinite isn't exactly like that. They do a little bit. They might be a little bit more subtle about it. But for us, we're like, we're just going to be very honest and open, tell everyone that this is part of the TG, like our fair launch. The patron sale, by being a patron, you're participating in the fair launch. And, I just felt like the model works really well. And like the market is sort of really hungry for something like this, like, and not another like points program, not another like, like 3 VC rounds and then finally a token launches and it gets a centralized exchange immediately, centralized exchange listing immediately, and like trades a high valuation. It's like a low float, high FTV project. Like these things, people are tired of it. Like the market's tired of it. Users are tired of it. This is why meme coins are sort of taking off so much. And so we're like, if we want to do this right, the only way to do it is to do it right and to like let the community be involved. And, we saw how the success that Infinix had with their patron sale. And so like we thought we could, take a similar approach. And so we actually just launched it today. We just relaunched it, the patron sale today. We sort of, we had it live for like a day or two, and then we sort of wound it down to redesign the art and everything, make the art just look really nice and sort of make the art on itself, like for the NFT, like just compelling in and of itself. And so that went live today. We're launching it effectively like 3K ETH market FTV, which is like, I think like 9.3 or 4 million right now. And so we're offering 40% of the supply through this, like to our patrons. And so that's 40 million tokens. And so every patron holder will be able to claim a set amount from the airdrop when the TG happens and the app goes live. And that's basically our approach to it. And so like we really like this. It's very naive launch. There's no like crazy plan. There's no KOLs. There's no like gotchas. There's no lockups, vesting. It's really just like it is how we stated, and we're just trying to keep it as honest as possible for like the community that wants to participate. We feel like this is the only way to gain their trust from early on and sort of like get a community that that is both engaged but also feels like there's something here, like something to be interested in. And so this is all like part of the reason of like why we went with the Patreon NFT stuff.
No, I'm super excited. I think it's always cool to see people trying to do things in a decentralized way and not just as like a cash grab for the founders. So
I appreciate it.
Yeah, kudos on that front. And then, as we're coming up on an hour, we can, the one thing I guess maybe a good wrap-up question, or unless you want to talk about something else, but what sort of example markets are you hoping to see? What sort of things are you really excited for in the prediction market space that maybe aren't there right now?
Yeah, I'm actually so glad you asked that. Honestly, I think prediction markets are just so cool because they're so flexible. You can offer them for so many things. You can also for assets like long tail assets that you want to trade that you can't trade elsewhere. You can offer for exotic events like real world events. You can offer for anything and even like smaller wagers. There's just so many things you can create markets for. It's just like you need to have the parameters right so that it's the implementation of it like sort of makes sense for like the size of the market and sort of like the cap that you'd want for a market, because every market does need a cap. And this is one thing I didn't mention, but there is something with prediction markets which is called which I call like the self-fulfilling prophecy. If you create like a prediction market or something, oftentimes if a prediction market gets too big, it could actually incentivize someone to try and manipulate the outcome who's close to the event. And so let's say you have a prediction market for like a huge prediction market for a very small election in a small town, that the person running for that election in a small town, if the prediction market for that election reaches like hundreds of millions, that the person running the candidate might have an incentive to just drop out to like and insider trade the market to sort of get a gain, because like the election that they're running for is just so small in scale, it's not that important at the end of the day. So like that's just one example. It could be for anything else, like any market where like you essentially incentivize somebody to do some sort of outcome. And so for that reason, you need to have a cap for a market. But once you have a cap, you can opt for markets for virtually anything. Like you could create a market for essentially what I'm really interested in right now. We have a lot of markets for events on Polymarket. I want to see markets for like facts or like for like, a question for like a content, like someone posts content on the internet and you sort of take that post and just ask, is this content AI generated or not? Is the fact stated, like the statement made in this post, true or not? And so like this is much different than like an event-based market that resolves based on an event. This is a market that sort of has an expiration date, but it's basically trades around a true or false like outcome. Is this sort of fact true or false? Is this AI generated or not? And so like it creates like an ability to sort of like put bounties on these things that otherwise would have no attention, right? Like if someone posts an AI content image of like yourself or me, and like we're not very famous people, like no one's gonna care to come, dispel this misinformation and say this is AI generated, this is fake. But if you create a prediction market for it, now all of a sudden you're giving people a financial incentive to come in and sort of price this accurately and eventually to resolve the market to get to some sort of truth, a truthful outcome. And so
isn't that the opposite then of what you're saying with the market caps? Because like wouldn't the way that I look at the idea of prediction markets are like why you want them is like you're basically putting a bribe up for insider information, right? Like you're allowing a market to be there, and like if you know better than what this is, you have some kind of insider information, you can come and make a profit off of it. So you're like incentivizing the reveal of information so that way ideally information in markets are more informed.
Yeah, definitely. So I think that is actually parallel to this point. So the insider trading aspect, like where emitting the information to the public, it could be viewed as useful. Where where it becomes problematic isn't that part. It's where if the market becomes self-fulfilling. So let's say, okay, I give an example of like the election. Let's say if we create a market for who will win like a fight between Kobe and Ansel, for example. There is a chance that if the market gets big enough, one of them decides to throw the fight to basically to sway the outcome. They obviously wouldn't do it if it was only like 100K because maybe they have more respect for themselves or whatever. But if the market gets up to like $1 billion, it's like this huge incentive for them to just manipulate the outcome. And that's where the market becomes self-fulfilling, where it's like the creation of the market essentially puts a bounty on the outcome in a negative way instead of a positive way. And so like if you think about it, like at that point, any market may essentially become an assassination market even, where it's like you try to take out somebody close to the event that sort of affects the market and sort of causes the odds on one side to go to zero, the other side to resolve yes or whatever. And so like this is a legitimate problem. This is people who are like people who stay from an ethical perspective, prediction markets are unethical or like they're problematic. This is where they're arguing from, and there is legitimacy to that argument. And that's why it could just be solved very trivially with like implementing a cap for market, a discretionary cap, such that you would have to say that like, like a presidential election can get to several billions because there's so much riding on it, but we can't let a local election in a local jurisdiction get to billions of dollars cap. Like we just have to, cap it at something that's a lot more reasonable than that. And once you do that, you can offer markets for a lot of things. So for these fact markets, it might not apply directly because fact markets are like, it's a fact, is it true or false? Maybe it's not as easy to sort of like essentially like manipulate the outcome. But like the idea is that you do need to have caps to offer a wide range of markets. And it's not a big part of it. It's just one thing that I just want to mention is that we do sort of like we were aware of this sort of like this issue the philosophical issue really that is like that sort of plays prediction markets in a sense, and then we have like a very clear strategy on how to deal with it. But yeah, like the idea is to offer markets.
Caps would be the hard question.
Yeah,
I don't know.
For like something like a Bitcoin to 100K, we definitely don't need a cap, right? Like that market is going to get so big, you don't need it. You need it for to be able to offer micro markets is where you really need it.
Cool. No, this was a blast, man. Anything I missed, or did we cover it all for Truemarkets for the most?
I think we covered most of it, honestly. The only thing I say is that like I think I see prediction markets as more than just like a financial tool where you just use it for speculation. As a financial tool, they're cool. They're really cool, but we've had really cool financial tools forever. And like prediction markets have existed for centuries. And for like financial instruments, we have like very exotic derivatives and stuff that futures contracts that exist that are similar to prediction markets. We've had made a lot of inroads there. Where prediction markets are super interesting is one for like the really long tail of assets, like low cap meme coins, where like, to take a short side on some of these. without without having to have really high capital constraints. And then where it's really, really interesting is where you use prediction markets as a form of like news or media to sort of have like this unbiased sort of information that propagates from them. And like we really saw this play out with the election, where Polymarket was the leading indicator for Trump win. Everything else said it was like basically dead heat. And Trump ended up winning. And not only did he end up winning, Polymarket was the whole night was like reflecting the most accurate outcome at any time for every state, for every for the actual election. Aside from the popular vote, it basically got everything right. And so like it was the first to show like that Donald Trump probably that essentially won. And like it was like Polymarket was traded as like 95 cents or whatever for Trump, yes. And the news outlets were like talking about how it's still dead heat. So like they were way behind, and it was just a huge validation of this thesis of that like prediction markets can be this source of information, at least an alternative source of information. And it's just like they really are like this unbiased news source, unbiased media source. And I think once you add in like a social element to them, where it's sort of like this idea of like fact checking markets or like community notes type markets that I was discussing earlier, you really like create like this. It really becomes media more than a financial tool. And I think that's the direction we're going for prediction markets, and that's where we're trying to like accelerate towards. And that's why we're not really trying to mess around with like AMM and sort of like worry about like everyone asks us like how are you going to get liquidity? Everyone's talking about like pooled liquidity in different ways to like attract prediction markets because liquidity is hard to come by. But that's actually I don't think there's the right approach. I think the right approach is to sort of focus on where these things excel outside of financialization, not really try to mess around too much with the financial base of it or the financial infrastructure for it, and really just try to leverage these as like this source of information, source of media, and like go from it from that perspective.
Super cool. Yeah, well, thank you so much for coming on. Where can people find out more on you?
Yeah, they can follow me on Twitter at Llama on the Brink, or they can follow our Truemarkets Twitter, which is Truemarkets.org. On Twitter, you can find us there. Our Patreon sale is live right now. It just started today, where the app will be going live towards the end of December with the TG at the same time. And so, like, yeah, there's a lot happening. Our beta app was live earlier. We sort of wound that down, and we're focusing on like just getting this full features, really competitive sort of prediction market out that can compete with Polymarket and sort of like really put us on the map.
Cool. Awesome. Well, thanks for coming on, Millie.
Thank you so much for your time, man.